Hey traders, in today's video I'm going to show you a powerful trendline trading strategy that most people overlook, but once you master it, you'll be able to spot high probability trade setups with ease. Here's a quick look at what you'll discover in today's lesson: how to draw trend lines correctly, how to trade using trend lines, how to use factors of confluence to find high probability trades, the trendline bounce strategy, the trendline breakout strategy, multiple time frame analysis, real chart examples. By the end of this video, you'll have a complete trendline trading strategy. Leave a comment below and tell me what topics you want me to cover next. I always check the comments for new ideas. Let's get started. One of the most common questions I get is, how do I draw and trade with trend lines the right way? So let's break it down step by step. A trend line is simply a line we draw on our charts to connect swing highs and swing lows during a trending market. Let's start with a downtrend. Price moves in waves. We get a run, then a pullback, followed by another run. The lowest point before a pullback begins is called a swing low. The highest point before the next run starts is a swing high. In a strong downtrend, price keeps making lower highs and lower lows. To draw a trend line in a downtrend, we connect the swing highs along the top of the price action. This trend line acts as a dynamic resistance level. Now, let's look at an uptrend. Again, we have price moving in waves, a run, then a pullback, followed by another run, another pullback, followed by another run. The highest point before a pullback starts is a swing high. The lowest point before the next run begins is a swing low. In a strong uptrend, price continues to make higher highs and higher lows. To draw a trend line in an uptrend, we connect the swing lows along the bottom. This trend line acts as a dynamic support level. Now, keep in mind, real market conditions aren't always this perfect. Price doesn't move in a straight line, but this basic structure helps us understand the market flow. So why do we even draw trend lines? In fact, there are two key reasons. First, trend lines act as support and resistance. In an uptrend, the trend line acts as support. When price touches it, it often bounces back up. In a downtrend, the trend line acts as resistance. When price touches it, it often rejects downward. But never enter a trade just because price touches a trend line. Always wait for confirmation, which I'll explain later in this video. The second reason we use trend lines is that trend line breaks can signal trend reversals. In a downtrend, we place our trend line above price. If price breaks above this trend line, it could be an early signal of a reversal to an uptrend. In an uptrend, we place our trend line below price. If price breaks below the trend line, it could indicate a potential trend change to a downtrend. However, this is not a guaranteed rule. Just because price breaks a trend line doesn't mean the trend has reversed. You need additional confirmations, which we'll cover in the next section. Now that you understand what trend lines are and why we use them, let's dive into how to draw them correctly to improve your market analysis. Before we start drawing trend lines, here are a few key principles you need to follow. A minimum of 2 touches is required to draw a valid trend line.